All right, there we go. All right, good evening, guys. Ken at Tortoise Capital. Merry Christmas Eve edition of the Nightly Strategy Podcast for December 24th, 2020. Let's start in the usual way with the market health check. All right, so today was basically a low volume, short session day, an inside day compared to yesterday. So we're getting some more of this sideways quiet channel. You can see this tight compression in here between peak of the dragon, the RL10 price, the PSAR, the bottom of the dragon, all within, one half of a percent. That's how tightly compressed everything is, and it's completely inside the dragon altogether. So that's today was not much of a movement day at all. All right, here's our 10-day, 30-day, and all-time high, or 10-day low for about a 2.9% 10-day range. Our 30-day range, I went ahead and moved it up from here to where it will be on Friday. So that gives us about a 5% range. Starting on Friday from 354 to about 372. The dragon has completely leveled off. The RL10 has leveled off at a lower high. It resisted the urge to sell off today, but it also resisted the urge to follow through. So it was a perfect day to go into Christmas with, I think, ready to break out in either direction. Based on the strength of the last half hour, there were a bunch of people buying at the close, which precedes or foretells a move up on Friday. So one of our swing trading mastermind guys, the senior guys, was briefing me on a system that a friend of his, a colleague, has been using, where he's finding that in the S&P, most of the gains are in the gap. That he's got a system that waits to see buying pressure and a recovery in the last 30 minutes, and then he buys that in order to capture the overnight move, because most of the year the U.S. has been driving the train, and a strong U.S. close has presaged a strong aftermarket session, which then gives you a gap up. And so he was specifically aiming to capture the gaps. And so today's move reminded me of that. We're going to take a look at the S&P a little bit later today. But otherwise, not much change from yesterday. Strong move up that is now leveling. We have the Bollinger Band mean above the 10-day low. And there's our Z1 and Z2 and the 30-day low. And poised, like I said, to make a strong move in either direction. It's got to get through 372 to have any kind of strong feeling, and then it's 374.5 at the Z2 line. So today was favorable in the sense that people were willing to hold the index position over the holiday. So I take that as a positive sign, also pointing towards an upwards move. Wasn't much going on in the sectors, but we'll take a quick look anyway. All right, so here's the S&P at 0.39, Treasuries at 0.4, the Qs at 0.44, Diamonds 0.25, and then the Russell basically flat at minus 0.07. That's about as tight a shot group or a spread as you could, as we've seen in the last couple months. Let's look at the sectors that worked today. So Mexico up 0.4. Whoops. Mexico up 0.4. Oil and materials up 0.5 and 0.6 respectively. Treasury, silver, and Wheaton precious metals up 2/3 to 3/4. Brazil at a strong day at 0.82. The stocks that did well today. We had quantum space batteries, 3.5. Tesla, 2.4. Simon Property Group, that's commercial real estate, 0.86. So no real runaways today. Microsoft and Apple, just good solid tech leaders. CAT, 0.64. Let's take a look at the underperformers today in terms of the sectors. Finance and steel, 0.14 and flat. There's Japan, 0.36. Emerging markets, minus 0.44. Energy, 0.52. Biotech, minus 3/4. Clean energy, off 1%. XOP, that's the oil exploration, and ARCG is the ARC Genomics, down 1.5 and 2. VIX minus 2.88. And then the cryptos just got smashed today. Ethereum down 17.5%. Still a intraday trades for me on the short side. I like them. Now the companies that underperformed. Let's look at these starting from the bottom. Nikola Motors just getting crushed. 13.75, down 8.5%. Virgin Galactic 3.6. Palantir 3.25. CRISPR, that's the gene splicer company, 2.75. Neo and Devon, Alcoa and Boeing, Pure Storage, that's the cloud-based storage solution that's also in the ARC. Twitter, U.S. Steel gave back some, and Cliff, McDonald's, and NVIDIA round that out. So a quiet day, except for the cryptos down here and the out-of-favor battery companies. I'm going to go to the daily report first, and then I want to re-record some of yesterday's lessons. All right, here we go. I've already seen the daily. So we are still bullish normal. Overbought long term. We are still slightly above average on the 2-day cycle, below average on the 10-day cycle. Risk off in the risk Z, and the risk Z is at a neutral, so it's kind of flattening out here. That would actually signal a return to the long side. So let's see what Friday has to do. But I'll be ready and poised for Friday. No signals in channeling and overreaction. The min pains are the ones that are closest to their 10-day high. United Health, Travelers, Microsoft, IBM, Coke. in the Dow. 10-day max pains, Chevron, Boeing, Intel, Nike. In the Dow 30 tactical, a ton of dojis today, not surprising given the very narrow range. Let me let that come up on your screen. All right. So lots of dojis, a couple channelings here in Chevron and Verizon. Verizon is also a 5DD, making that interesting. Let's see, 5DD, and it broke down on the 1 day and, or I'm sorry, the 10-day and the 1 month. Lots of good auto framers in here. And Boeing is interesting. It's a triple screen and 4.5 to 1 in the auto framer, so that looks attractive. You can see it's got smashed on the 1 day and the 10-day. In the ETFs, just a handful of dojis. Handful of dojis. No breakouts on the NDX. A good number of auto framers that test out well. There's some triple screens that are coming in. Energy should be of interest. It's a triple screen and it's 4.6 to 1. The industrials are a triple screen and they are 2 to 1. And oil exploration, a triple screen and also 2.4 to 1. Some 551Ws that are noteworthy. Brazil at 2.1. The S&P itself at 5.6 to 1. That's how small today's doji was. And then 2.9 to 1 on consumer discretionary. So all good. Tons on the auto framer. Too many to even list. And you can see all the framing data, so you got plenty of time to work through those. The ones that really stand out for me, the S&P and Intel. I would say the energy sector is always interesting. And Boeing. Honeywell and McDonald's I really like. Let's see. And then there's Disney and Brazil. So plenty of good symbols to choose from, and that framing data will help you set up your trading charts. Daily squeeze, there's obviously going to be a lot of those today because of how narrow the range was. And then the S&P, when that's the first topmost symbol, that just tells you how compressed everything was today and coiled for a move on Friday. And I like the fact that the small caps, I initiated a swing trade on them today. I'll show you that in a minute. On intraday weakness, and then started to recover with a supported spring crossing. So we'll see how that shakes out. Mostly in the fall on the Four Seasons of MACD. In the ETFs, we're starting to get a few summertime plays back on board here. I especially like Apple. On the multi-time frame NDX summary, Verizon stands out because of its broad weakness. McDonald's gave back a little bit today too. I'm going to go revisit that swing trade again. On the upside, you had strength in Coke, Procter & Gamble, and Visa. In the ETFs, strength in consumer staples, Treasuries had a little bounce today. But really, the three best, let's call them. Let's just go all four. We're going to say, look, finance, tech, small caps, and mid caps in the U.S. You could do a lot worse than those. All right, let's take a look at the. We're going to shift to the. I guess I want to recover the highlights of the trades from yesterday in order to get these on film. All right. So yesterday was a day of Z3 pinch breakouts and supported spring crossings, all of which were set up by their swing charts. And when you drill down intraday and you see opportunities to take advantage, you jump on them. So this one, right from the get-go, was U.S. Steel. And we had a breakout above yesterday's VWAP, and then about a 15-cent risk as it moved off of the rising VWAP. After 5 bars, it moved out sharply. We've got the Wu Wei exit strategy in here. We wait for 1, 2, 3 circles above our entry. On the 4th one, we move that stop to the PSAR, and then leave it in place until the Bollinger Band mean picks it up. And I'm showing a couple other alternatives right now because this first leg up was so strong. By the time you move the stop to here, you still have another strong move up here that you want to lock in. Plus, this is where I added a second position. So since I got that second position on already, I would not be offended if he, instead of stopping here and waiting for the Bollinger Band mean to pick up, if you just followed the PSAR dots and just had a plan to just trail with the PSAR, that's fine. That's a good sniper or an accelerated manager. Or because of this nice move here, I wouldn't be offended if you pick the Z1 line and go all the way up. Now, that's justified in my view because of this. Here's a formation that I want you to notice. When you see like 5 bars all tightly compressed here, so you had a little breakout, right? That didn't fail any further. In fact, you have this little chunk right here in the same way that you have this chunk. So you've got 3 little consolidation levels, and you have one little burst. You have a burst of buying power that takes it up to the next level, and then it stabilizes, and then a buying burst, and it stabilizes to the next level. So as this thing gets into the next little burst, then it's reasonable to have this stop at the bottom of this last consolidation box. All right. So, and the reason would be that you're expecting this thing to continue just like it did these other 2 times, here and here. So now we think this should hold. The price that tells you that didn't hold was this price. If it comes back and gets below here, then this upward move just got negated. So there's a real strong reason that by this time you want to have your stop pull that up here. You'd love to have your stop like right here, right now. So if I just take the standard Wu Wei, you can see how far away that I am. And I don't like that because I've already got 2 positions on. So I would not be offended when you see this thing moving out if you had moved your stop from here up to the PSAR or just right up to the southern skin of the dragon and be right here underneath the support level, right? So now you could say, if I take my stop right there, now let me try to get a better one there. Yep. So if I just leave that stop there for now, then I could decide, I could either continue to follow the southern skin of the dragon or the Z1, or I could just pick up when the PSAR dots exceed this, then I could turn that into a PSAR stop, or I could just let the Bollinger Band mean catch up, and then when that takes off, I'd adopt it here. But this would be, in my view, you could move your stop right to there, like a sniper, and be completely justified. In fact, I would not even be offended if you raised it to like a 2-bar low and went there. So you tell me, that's a good problem to have. How much of that move do I want to keep? So that's the point that I wanted to make on this exit. And now, and obviously, the way Bill and Jeff are doing their study, you could just take the whole PSAR exit right from the get-go instead of and start accelerating right now, instead of taking the Wu Wei exit, which is here and then up and then over. You could just take this one, and they're finding that works pretty well too. Especially that works, and it looks attractive when you see these little pullbacks that don't even get to the Z1 line, but they're just staying inside this nice tight range, and then it breaks out quickly 3 times in a row. Then that makes the PSAR kind of a no-brainer, or even the southern skin of the dragon or the Z1. You don't mind that at all. Okay. Here is a similar construction in Tesla yesterday. So we have here was the close, gap down, and then sold off sharply. I don't know how sharp that is. It's kind of just a price decay from 636 to 624. So you get a nice orderly sell. Now notice you have the RL10 breaks down. That's the lowest point. Crosses the baby dragon. Crosses the dragon. You get a PSAR flip. So you get your standard entry at about 627. Stop at the bottom of the RL10 at 624. So that's a $3 risk. And then you get a nice sharp move. Again, now notice this is another one of those nice clean steps. It gives you that surge up. It doesn't even break. Surges up. Gives you a nice price level here. Then and only then does the Tesla buying pressure really come rocking in. Right. So in this case, what I'm showing is the Wu Wei exit again. Here you got 1, 2, 3. So you bring the stop up to here, wait for the Bollinger Band mean to pick it up. This would be the Bollinger Band mean exit, the exit strategy right there. But I also believe in this one because it moved out so nicely, you could just adopt the PSAR. On this one, when it really zooms, you could even be here. But even that one feels like it's kind of lagging behind, doesn't it? So you could actually have that as a fail-safe stop, but then decide, as you see this thing moving out after your second entry, I wouldn't mind just having this thing, a 2-bar low and marching up. So right now, I could even have that stop here at 642 because you're seeing that little doji. And I'll tell you what, if I saw the doji just like that, I might just take half of that again and go to 644 because that's a $2 improvement. And your initial risk was only $3. and you've got two positions on. So you're actually saving a whole execution R by, instead of taking the 2-bar low, just giving it a 1-bar low right now. We're halfway up the stack and letting that doji be what it is. And you find out, hey, is this doji going to really work? What's this little doji going to do? Is this where it fails? Well, if so, I want to get out here or here. I don't want to wait all the way down here to the Bollinger Band mean, for crying out loud. That puts the second trade as a loss. I don't want that to lose money after a move like that. So I don't mind this stop or that stop, and just leave that pegged in place until, and then you just watch these other time-based indicators. As they start moving up, then maybe you raise it in addition. But otherwise, you're just pegging that in like a mountain climber, putting in safety before you need it. All right, here's one in pure storage. This is the ARC Innovations position, and they bought 35 million of it at about 23.70. So there's plenty of upside to this thing conceptually. This had a nice big gap up. It moved a manageable risk box from the open. I bought it. I gave back too much, I think. I wasn't prepared for that much volatility, I guess. I didn't want this to go negative, so I just cashed it, got bottom ticked basically, re-entered, cashed one at the PSAR. Other stocks that are easier to borrow, I might have gone short here, but I just waited for it to bottom out, make a higher low, and then you should recognize what pattern the yellow dot is. +1 if you recognize that as CATA 2. I waited to see it break out of the Z3 box, so I bought it with the stop just below the VWAP, then cashed a sniper exit with the PSAR, let it find support at the Z-1, bought the supported spring crossing, and I think I cashed this a little bit later at about 24.60. So not bad for the first day trade in PSTG, I should say. All right, this one is Mexico. So this is a frog champion, and it was very strong on the swing charts. And so when it closed here, then gapped up, never looked back. When it crossed yesterday's VWAP, I bought it with about a 15-cent risk. This one illustrates, again, when you have a really strong move like this, a lot of times that will leave that Wu Wei uncomfortably far away, in my view. So this would be the Wu Wei exit here. And now you get 1, 2, 3. On the fourth dot, you move it up, and then leave that in place until the Bollinger Band mean picks it up. And then you just ride that one to the managerial exit. I would not be offended if you had just said, it moves so nice here that I just want to take the PSAR exit all the way and just ride that one and treat that like a sniper or an accelerated manager. And that gives you, at the end of the day on this one, it really didn't make that much difference. But I kind of like the blue line. The PSAR stop is a legitimate alternative to the Wu Wei exit. And if anything, it's even more robotic. So that's what a frog champion looks like. And that's about 6R between those two standard positions. Okay. All right. Let me shift to today's lessons. and just some patterns to notice. And we're going to be highlighting the Kata 2. So this was our opening. So I want you to notice 1, 2, the lower lows. I mean the higher lows in the RL 10s, which then gives you like a supported spring crossing right there. An additional Kata 2 right there, because now you have another higher low. You have a third higher low. So if you just buy the RLXD in each one of those, you have all 3 of those positions on in Tesla with an entry at 646, 652, and 658. And before you take your exit up here at 661, which is a pretty good trade for the day. You know, especially when your initial risk is about $2. So you make $15 on 2 on the first position. So that's about 7R, and then 5R, and probably 3R. So that's about 14. That's about 14R in Tesla today. Yeah, Chi Wang asked me, can I elaborate more on why EWW is interesting in swing to make it a potential move? Well, it's a frog champion, meaning that its signal to noise ratio on swing trades is outstanding, meaning that it swings for long times, typically. Same with Brazil. This was the trade box that we had in Mexico. So let me just show you why that's interesting. Right, this is for today. So when we were talking about yesterday's move, the one that I showed you, there's a reason why it was interesting yesterday, and another reason why it's interesting today. So the reason it's interesting yesterday, remember, the move that we're talking about from yesterday is this one, that it opens up near the low, or right at the low, and then has this enormous all signal day, and it breaks out of this swing visual trading box, right? The reason it was interesting was that on a 10-day basis, this thing was oversold, and it was near, and if you looked at the entire yellow box from here to here, if you said that's the 50-yard line, oops, and then this would make it oversold, and this, anything above here would be overbought. So if you just take this from here to here as the normal, and you say everything down here is oversold and everything here is overbought. So 2 days ago, this thing closed at oversold. So that puts it in a critical state. If it breaks down below here, then that's your signal to be a swing short. Otherwise, if it reverses, well, you got this right back to the top of the channel, which is exactly what it did. And now notice how big those real bodies are on the moves that it makes. It made this move, it makes that move. So it is very directional intraday. And when this thing swings, it gets these orderly moves for 2-3 days at a time. So now we're now on this next one. So the fact that it was oversold and it was in a critical state near the place where it breaks down and in the bottom 20% of this big channel, that's why it was especially interesting. But Mexico is always interesting. It has this tendency to swing very well on the longer term charts. So it has these very pronounced directional moves. So here's a Kata 2. Big long swing, big long swing, big upswing, big downswing, first leg, pause, second leg, third leg, and now that's where it got interesting because it was right in the bottom of that box. So if it fails, it's going to come back to this level. But if it works, it could get back up to this level. So that makes this a very interesting place. That makes it a very interesting trade location on the daily charts. Okay? So that's a case where we're connecting the swing trades and the day trade charts. Now, what makes this one interesting was yesterday it broke. It had that nice big directional day where it closed out of the yellow box. So we're now ready to play this on the long side as a continuation play. So it's interesting at this location in the same way that it was interesting down in this location, based on where it was in this visual trading box. The fact that it broke out of there, crossed the whole box and closed higher, and is now getting ready to break out of the dragon and then change the PSAR. This thing could get all the way back up to 44. Well, it didn't because today was a quiet, shortened session day, but still the potential for a nice big move to the upside. So EWW is one of the frog champions because the intraday signal to noise ratio is large, and it also swings very nicely. And it is least correlated to the S&P. That there are days when the S&P is just flat, but EWW will give you a nice strong directional move. So it has enough independence of movement. Plus it's very liquid, has its own currency, is the largest of the emerging market countries. So Mexico is perfectly postured, and we've been riding that one for 4 years. Yeah, I'll find the one for the Sunday night. Yeah, I thought I had posted that one already. Yeah, I'll go back and find it. Okay, so let's get back to the other. This one was, this is today. This is also I just want to hit the supported spring crossings here. Here's one. So there's a couple on this one. First one, there's this tactical play where you get this one will give you a supported spring crossing. This one is the Kata 2 because you had a low and a higher low, and then it bounces off the VWAP. That's now it doesn't pay off. Like you probably have to get out of that when it fails back to here, right? But it's important that you see this as that's the entry right there, and then that turns out to be the trade. So now the second one now is this. You have a low and a higher low, right? Builds that nice base. So that makes this a Kata 2, but it also, technically, I guess you could call that a supported spring crossing too. To me, it feels more like a kata 2. This is not much of a harsh sell-off, That's what makes it a kata 2 to me, is the fact that you have this low and then a higher low, and then the supported spring crossing as it's crossing the VWAP and the PSAR flip. I mean, geez, everything we have says buy that. And then you get this. Now, this is a nice problem to have. Your stop was down here. That's what your initial risk looks like. And if you're using the Wu Wei exit, again, the stronger the early move is, the more that Wu Wei exit gets left behind. So the Wu Wei would be 1, 2, 3, 4 to there, picks up this, and you'd still be in the trade. I mean, so that ain't bad. Otherwise, you might have taken the sniper exit here. You'd be happy with that sniper exit. And this is the case where the manager exit probably gets you out up over here somewhere. And if you were considering a second position, that would be a logical place right there. And the reason would be, for those of you playing at home, is that the Z3, this max excursion here, that line gets broken. And this support didn't even get into the dragon, and you can already feel it heading up. So I wouldn't be offended by the time, like if you just got right here and said, I'm going to put my stop in there, instead of waiting for 4 or 5 more bars, I would not be offended if you just did this, and we're then doing like 2-bar lows. A 2-bar low, you're still in all the way up. 2-bar low gets you out up in here instead of all the way down here, by the way. So that's that 2-bar low idea, especially when you're running along the Z2, and then you get a double top right there and it starts to fail. Why not? Because that's the same price level where it fell before at yesterday's VWAP. And then from there, it fell all the way down to here. So do you want to give back all of that? No. So that's a good problem to have. Today's Brazil. Looking at kata 2 again. Yeah, maybe. I always like it when it gives me a higher low and crosses the VWAP and the Bollinger Band mean. That would just be an automatic for me right there. And then I would probably have gotten out here. If not there, then I'm maybe here. So either one of those would get me out. Then this one would probably have gotten me back in. And then that would have gotten me out at scratch. And then I got... So now I have this. That's like a low and a higher low. I could either get this one or this one as an entry. This one is nice because you have another kata 2 right here. So you have a low and a higher low. That makes this a beauty. And that's the one that crushes it. So you don't have to be right on these. You just can't stay wrong too long. Those first two, they don't lose much. They just scratch. So what? This is nice. That's a nice entry on the Z3 breakout for a second position and a third position. You probably don't take this one because it's getting so close to the end of the day. And in fact, this is where I got out right here and then immediately regretted it. But there we are. So I think I think Brazil works again on Friday. This one is Mexico. Here was a Z3 pinch in the morning. And yeah, there's a low and a higher low. And it's crossing the VWAP. You could wait for it to cross the RL270 or take out the Z3 pinch. You know, the early enter here is when it goes into the spring or goes into the summer, but I would accept this one. Here's a second entry for a Kata 2. This would have gotten you out, not probably, it should get you out. And this would be the logical sniper exit. So you get this trade. And then you immediately are re-entering because of the Kata 2. And then you either get the sniper exit here or the Bollinger Band mean exit there. So either one of those, you're getting out at about the same level. And the reason for exit discipline on all of these is what happens after that. That's just as easy. That's here's the size of the move up. And there's the size of the move down. Same move. Intraday noise. And it was a doji for the day. But if you're using those modified frog boxes, you trade both sides of that thing with equal ease. Here is your, let me show you where, and then on the downside, there's a Z2 breakout. There's a collapsing dragon. There's another collapsing dragon. There's where it collapses below the VWAP. So there's all kinds of places to get short on that one. The final one I want to show here is the S&P, for those of you doing futures. And just to highlight, today was the day of the Kata number 2. When that RL10 rolls over, that's a decisive play. And so what you're looking for is here and here with tight stops. That's 20 cents. And if you were playing the supported spring crossing, you would get that one. But the ones I really want you to see, to me, the lower risk ones are the Kata 2s, which is this, and then this one. Okay. All right. That's everything I got for you today. We'll get this posted and in the usual spot. You guys have a great Christmas tomorrow. No podcast tomorrow night. We'll pick it back up Friday. And then off we go. Take good care, and we'll see you Friday.